Hey traders, Raghee here. Let's get a quick audio and video check-in for our Wednesday, January 6th episode of Charts and Coffee, part 2 of our political shenanigans caution days. All right, let's talk a moment about caution days. I think audio and video should be good. Excellent. Thank you, Harley. Thank you, Steven. Thank you, Bill R. Good to see you all. Excellent. All right, so let's talk about something that is a sometimes a little prickly topic, and that is where the markets and politics collide like two rams on the side of a mountain. Gang, Stan Druckenmiller, and if you don't know who Stanley Druckenmiller is, Google him or go to YouTube, even better. There is a Real Vision interview with Stan Druckenmiller that Real Vision did. It's free. I'm not promoting Real Vision or Stan Druckenmiller, although he is arguably the greatest trader of all time. Really not arguable to me. And one of the things he talked about, this was filmed shortly after 2016, the elections, and he said, look, a lot of my peers, a lot of my friends even, traded horribly in the aftermath of the election because they were letting election opinions, political opinions, shade what they thought the markets were doing. In fact, they went so far as to not trade what they saw, and they just took their political opinions and somehow overlapped them into an indicator from hell. I feel compelled to mention this briefly because I'm going to wrap this conversation up, because they don't have any place in your trading. Know that there's an event. So let's talk about the caution day. Let's get tactical about this. There's a caution day yesterday because of the Georgia runoff, and today from the extension of that. And one of the things that is really important to know is that when we have these types of events, the markets are going to behave in a little bit more difficult a manner. So case in point, I'm going to be straight up with you guys. Yesterday, I was day trading the Dow, the QQQ options, and the NASDAQ futures. So Dow futures, NASDAQ futures, and QQQ options. I like to combine options trading with my futures trading, especially when I can trade the futures contract and the alternative ETF. And the Dow, because of the caution day, absolutely acted in the most unpredictable way. And I lost. I lost in the Dow, and I was pretty crushed about it because directionally we were long. And directionally, I'm kind of rewinding here. Sorry for making you guys dizzy with this. It makes me dizzy just to look at. Directionally, I was spot on. But what happened because of the caution day is where the support would normally be waiting. We exceeded it by a little bit, and then we started moving up higher. The NASDAQ fared a lot better. The NASDAQ was a really nice win for us, but that's what I'm saying. So normally, I took 3 trades. I think of it as a batter when I'm day trading. I had 3 at-bats. I went 2 for 3. Now, I like to go 3 for 3 because I like to be very selective about the pitches that I'm going to swing in. I'm not swinging everything. We're not putting on a half dozen. We're not just going in like twitchy little day traders. Don't be a twitchy trader, all right? I like to be very selective. But yesterday, because of the caution day, and likely today as well, it's going to be a tricky morning. The thing is, we don't know if this market wants to take the results that we're not 100% certain on yet and say that it's good or it's bad. Right now, early analysis. Let's see if that news and that chatter, right? That chatter equates into some bullishness. But some early takes are that it'll pass the stimulus, right? This however the Senate's going to seat after this runoff election, that it's going to pass the stimulus, but it's not going to be enough to have corporate rate hikes. So the equity markets are going to like that. That's one narrative out there. Don't get emotionally engaged in the narrative, but look to see if the price action responds in that way. Okay, look to see if the price action responds in that way. So hear the narratives that are being talked about, and then ask yourself, if that's bullish for the stock market, is the stock market responding? And gang, that's for everything. Macro analysis, business cycle analysis, this kind of, when I'm talking about these special, very focused news narrative. Make sure that the narrative matches the price action. Otherwise, what do you know? By the way, price is always right. So then ask yourself, well, clearly there's another narrative at play or another twist on that narrative at play. Be extra cautious. Okay. Did I do enough of a public service announcement here? Don't get engaged in the politics. I promise you, it's not going to make you a better trader, but do understand how that's affecting the psychology of the market. I hope that helps. All right. So yeah, it's going to be, Rolex. It's going to be a chaotic, what I call a caution day. I'm absolutely, Stan Druckenmiller, I totally agree. Rapid. Yeah, if you guys have some time, check out that interview. It's going to be well worth your time. Absolutely. And I agree with you. Let's take a look at, I'm a huge fan right now of the playing cat. It's been a double green. So let's do something we do often in this room, which is, all right, where does Caterpillar, I'll do this right with you guys here. Where does Caterpillar have exposure in the passive investing world? Right? Dow and also the industrial XLI. So that means what I want to do is on my indicator down in here, I want to plug in DIA and compare CAT to that structure. All right. Now, what is the DIA doing? Let's do that again. DIA. Why is it not taking? Come on, doesn't it know we got a live show going on here? There we go. DIA. Boom. So the very bottom, I've got double green CAT, double green DIA. Absolutely, I'm with you. But what else is looking good in that DIA? Goldman's been looking very good. That's more of an XLF financials conversation. Honeywell's looking good. That brings us right back to the XLI. All right. So I'm a big fan of a number of names. I keep minimizing my charts. Sorry. I'm a big fan of a number of names in this. Not a lot. Not everything's double green. In fact, right now Honeywell's sort of losing a little bit of that footing. However, it's still a buy. So those are things that we will focus on as we go forward today. I have a new pair of glasses. All my glasses are the same frame, but I got a new pair of glasses. It's just not sitting right on my face. It's time to go back to some contacts here. Oh my gosh. All right. Yeah. Okay. I'm a big fan of the pot. A lot of folks have been asking me about pot, ETFs, as well as infrastructure. Infrastructure was something I liked before the election because this is where you ask yourself, who's going to win either way, right? Who's going to win either way? Is it oil services? I didn't want to play oil services heavily in front of the election, regardless of the rotation. But industrials, infrastructure, absolutely. I completely agree. Good morning, Bruce. PLTR, sure. PLTR. And by the way, I'm on my TradingView charts this morning here. Okay, so PLTR, double green in terms of, that's what it has been doing. So even though it's gone recently yellow, I'm not going to be particularly concerned about that. Is it buyable? Yes, this is where, gang, and I'm going to presume you guys have done the heavy lifting. You determine that your best relative performance or whatever the catalyst is for the trade is better now, is better in that stock. Now, IPO is an interesting, as is ARCW. So I would say, Bruce, when you're looking at PLTR right now, I would pay very careful attention as to what Kathy Wood and company are doing with the ARCW. And then I would also take a look at the IPO for a relative performance type view of, okay, is this the best IPO? Is this the best structure? Is this the one working with the direction of ARCW, working with the direction of IPO? So those are things that I would keep in mind. But generally speaking, let's go ahead and do this. Let's let's put this up there with ARC W. All right. Now, I would say I don't have a problem with PLTR at all. The tide, ARC W, is moving higher. So that's fine with me. I don't know. Can you guys see? I know it's kind of small. Let me see if I can make that font a little bit bigger. Let's see here. Can I make that font bigger? I think I can. Let's see. Labels. Yeah. I'll see if I can't make that font. Oh, there we go. Label size. Let's try large. Oh, that's a little bit easier to see. So what I'm looking at is an indicator that allows me to see the structure of the individual stock, its market trend structure, and I'm comparing that with the structure of the passive investing universe that it exists in. All right. So I don't know if that's any easier to see, but PLTR has gone a little sideways, but the overall tide that's going to push it, ARC-W, is still very much green. So I do like that. And this is pretty much at the heart of the way I like to look at the market. Wes BH89, taking the Futures Freedom course. Cool. What would I recommend for finding trending days? You're looking at it right now. I'm going to use a couple different tools. You can use this particular set of moving averages to understand what's going on a 1 minute chart as well as you can a weekly or a daily. For me, trending days, though, is something that, well, so if you're looking for trending days on an end of day chart, my friend, let's say we look at something like the ZC, right? If you want to know what a trend looks like, look at corn futures, look at soybeans. They've gone parabolic, but those are end of day daily timeframes that have gone not only double green, but they're parabolic now. So be a little careful. In terms of the uptrends, let's say intraday, right? Intraday. How do I find trending days? So for me, trending day is a little bit more of an intraday nuance. So if I'm looking at trending days, that's actually going to be something I will also determine from the daily time frame by way of directional bias. Okay. And so, yes, my directional bias is still bullish. I'm assuming volume, but wanted to know if you could trade only 1 day a week. How would I decide that day? The same way I would decide the other 4 days. Directional bias, clearing ranges, as well as clearing range breakouts. But for the most part, I'm still dominantly looking at, and you're trading the S&P. Yeah, I'm still very much long and long only. But if you're trading the S&P, let me give you guys a tip. Always determine, and this is something that I see a lot of traders do. I think it's a tactical mistake. Don't think the S&P, the ES, is the captain of its own ship, because it's not. Because of the weighting of tech and the weighting of financials and the weighting of healthcare, S&P tends to track with either, as I like to say, it's big brother the Dow or its crazy cousin the NASDAQ. And most of the time it's the NASDAQ because of the tech weighting. So before you dive into the S&P, make sure that you have a read on whether or not it's tracking with the NASDAQ or the Dow. And then, and only then, trade the S&P. And if tech, healthcare, and financials are outperforming, and whichever way you like to measure them, go with the S&P. It will probably outperform, but be very, very careful in that regard. Next up is Chris. Gold moves based on real interest rates rising. Thoughts? So on real yields, Chris, yes. So for those of you that are not familiar with the real yield conversation in gold, absolutely, Chris. I'll tell you what, not 2 in 10 people understand that concept. So kudos, yes. By the way, if you're looking at metals right now, please, please, please prioritize copper. I did a free video on this last week. You can check it out at the Simpler Trading website. Take a look at copper. Take a look at the proxy for copper, which is your Freeport-McMoRan, FCX. Take a look at silver. Silver is actually organized into a trend. in a way that's better than gold at the moment. But yes, so when you look at nominal yields and inflation, you have real yields. And real yields and gold have an inverse relationship, right? Or a negative correlation. And correct. So until real yields start to drop in a little bit more significant a way, we're probably not going to see that uptrend in gold really organize the way that it has in the past. So I would say focus on SLV, focus on FCX, focus on SI, focus on HG, however you want to play that, stocks and ETFs or the underlying futures. Focus on those, and then wait for gold to get with the program. But yes, absolutely, Chris, 100%. If I have to listen to some chucklehead on television or financial interweb talk about the inverse relationship of gold and the stock market, it's like, oh my gosh, really? It doesn't even make sense when you lay the two charts up side by side. And kudos for knowing that. I'm telling you, not 2 in 10 folks understand that. Gang, gold moves inversely to real yields. You got it. And until real yields drop, right, I'm not going to be that optimistic about gold. That said, gang, I've been talking about this in the Charts and Coffee show for months now, because we've been doing this now for months. I am very bullish gold. I am exceedingly bullish gold. But that doesn't mean we have a setup. And I think that's one thing that a lot of traders, because we're traders, we have timing is our utility for getting into the market, not say dollar cost averaging. So be careful meshing the world of investing and trading. It turns into a great big mess because they're two very different practices. So having said that, I'm very bullish gold. I'd love to get long gold, and maybe tomorrow, off the 8 EMA, if we get a slight pullback to the 8 EMA, maybe tomorrow I could do something a little bit more aggressive there. But it's still not a double green, and silver is and copper is. So yeah, terrific comment. Thoughts? You're 1000% correct, Chris. Yeah. All right, Microsoft. Okay, so here's another situation where I like the QQQ. All right, so let me do this. Let's take a look at the, where are my little tools here? All right, come on. That's weird. So this is where I want to compare Microsoft to the XLK. And I want to compare Microsoft to the QQQ. Right now, I'd say if you want exposure to Microsoft, go tide, not boat. Okay. And by the way, when you think about XLK, think about Apple, and Apple's double green right now. So this is not so much the answer to what do you want to do with Microsoft, but I think the question that I always try to answer before I get into the analysis of the symbol is, well, why do you want to trade Microsoft? I'm not a fan. I know it's coming into earnings. It's way too, I mean, look, I think right now it's way too, I don't want to short it. Let me put it that way. That's the best way for me to put this. Do I want to buy Microsoft over XLK, QQQ, or Apple, or a number of other tech stocks? No. Generally speaking, I'm fine being long, but I think there's other better names. The one thing that Microsoft does have going for it is it's generally been in an uptrend and it's coming up towards earnings, but so is Apple, right? So I would rather look at Apple. And then if you want to make a bet on both, this is the cool part. Look for opportunities in XLK. All right. So hope that helps. Nick's asking about the Russell. Nick, there's a seasonal tendency for the Russell. We had talked about that in this very room in our Charts and Coffee. There's a seasonal tendency for the Russell to be the weakest of the four indices. And so I think what you're really seeing is just that tendency at play. And that's one of the reasons I'm not as bullish in the Russell. But yeah, I tend to, I mean, the Russell's certainly not in a downtrend. Let's not get too dramatic about it. But you take a look at, so be careful. Now, you're asking about why tech is selling off. Again, I don't know specifically what window of tech you might be focused on, because you ask a great question. The Russell tends to have a rollover in the early part of the year. So I'm being very cautious, although day trading Russell to the long side, perfectly fine. By the way, Nick, day trading the KRE to the long side is perfectly fine too. So when we talk about tech, let's be, and as you mentioned, why is tech rolling over? Let's be specific about where we're seeing the weakness. Is it the QQQ? Is it the XLK? Is it the XLC? Is it the XLY, right? Which individual symbols within those are rolling over? So when it comes to tech, because of the way that it's been spread out across the passive investing universe, I'm going to be very specific to tech, communications, consumer discretionary, and then the broader QQQ. So I don't know that it's sector rotation. No, I just think, remember, yesterday the tide went out on the markets in general. Small caps have been benefiting likely, I don't know, because of some dollar movement. Look at the Russell in the US dollar from time to time and look at their relationship. Maybe that'll help a little bit, but you're absolutely right. Tech is pulling back, but my advice is always, when you're looking at tech and any kind of weakness in tech, try to look at what part of tech is rolling over. Is it XLC, XLY, XLK? All right, so I hope that helps. And again, we're going into severe caution day. As we talked about the early part of this chat, I'm going to let you guys get to work, as will I now. Thank you as always. Yeah, Pamela, we've been long the TAN ETF in our Sector Secrets Mastery. And that reminds me, tonight, gang, tonight, let me leave you with this. If you want to keep this discussion going and get a better idea of some of the things that I do, you can register. Even if you can't attend live, we'll send you the replay. And I'll go over some of the processes and results from 2020 and what I plan on looking at in 2021. And that's going to be at a webinar I'm doing tonight at 8 p.m. You can register at simplertrading.com/hour. Okay. Stephen, the double green is available. Those indicators I'm sharing with you guys, they're available in the Sector Secrets room and in the futures room. So they're not broadly available. It's available where I am most active, in the simpler rooms. Okay. And thank you for the question. Yeah, there are a number of tools that I make available only to members of the Simpler Futures room, like my HPMR, and in the Sector Secrets, which are more my long-term trading tools. So yeah, where I'm at on a regular basis is where my tools, my free tools, will typically be at. Okay. I agree. The dollar is going to continue to sell off. Keep an eye on the currencies, 100%. All right. Let me let you guys go. I'll see you guys tomorrow. Thanks as always for being a part of our Charts and Coffee crew here. And I'll see you at 9.